Deribit stands for Derivatives and Bitcoin. And as you can expect, we are a trading platform for derivatives on Bitcoin. Today I'm going to talk with you about the derivatives, the world of derivatives, and especially the world of derivatives in crypto and the importance of it and the potential growth of this. All right. So I'm Marius Jansen. I'm a co-founder of Deribit, currently in charge of the marketing. So I'm the Chief Marketing Officer, and I've been active in crypto since 2013. We are an Amsterdam-based crypto derivatives exchange. So we are a Dutch company. It's founded by me and my brother. Sometimes we are called the Crypto Brothers for people who know us. And we have currently around 10 people working on Deribit. It's like 5-6 programmers and a couple of other guys like me, my brother. Lennart is also here in the stage. But right now we are a top 3 futures exchange. But more importantly, we are the leading crypto options exchange. We are basically the only platform where you can actually trade options in a way with some nice liquidity. All right. I want to explain briefly about our website. This is deribit.com. If you go to this website, here you see an options page with all the strikes and all the information. It looks a little bit impressive when you see it for the first time, but this is how an options page looks. Also, of course, we have a mobile app, so you can trade from your pocket futures and options.
Welcome. This is a basic tutorial explaining how limit orders work. A common misconception with the limit order is that any limit order will be filled at the market maker fee basis and will be eligible for a rebate, a negative fee, or a discount on Deribit. But this is not the case. There are several circumstances where indeed a limit order will be filled as a market maker order to receive a rebate, but limit orders can also be orders that are matched directly against the current orders in the order book. And in that case, you pay the trading fee and don't receive any rebate. In this video, we will explore how this all works, with addition of the different order book types: GTC, or good to cancel, FOK, fill or kill, and IOC, immediate or cancel. Before we dive into this, we would like to explain how an order book works. On the lower part of the order book, you can see the buy orders. They are also called the bids. From low to high, you can see the orders here. Above that, we have the sell orders. They are also called the asks, or ask orders. From high to low, you can see the orders here. Let's do 2 examples where we are going to place a buy order. One on the bid side, where the trader allows the market to fill their order, eligible for a fee rebate and taking the risk that will not get hit or filled, and another matched to the ask side, where the trading fees will be paid. When you enter a price in the price field that is lower than the lowest ask order at this time, then the order will be placed as a buy order on the order book bid side. As you can see, the order I just placed is now in the order book, waiting to be hit by another trader. With GTC, or good to cancel, selected, this order will remain in the order book until filled. When you enter a price in the price field that is higher than the lowest ask order at this time, then the order will be executed against the ask side and you will pay the trading fee. These are the most important conditions. The price your order will be executed at cannot be higher than the price you enter in this field, and that's why they're called limit orders. There's a limit. The price which this position is executed at can be calculated by the quantity of the order and the depth of the order book. If there's 100 contracts at this price level and you want to do a buy order of 10 contracts, the order would be filled on the lowest ask price, as the order would not exceed the current ask that is in the order book. If the entered limit order quantity exceeds the size of the lowest ask order, then the order would be matched against the next ask order automatically until the desired order quantity has been filled. This is done by our blazing fast matching engine that can process thousands of transactions per second. As a reminder though, the highest price of this matching cannot exceed the price entered in this price field. You can also place a limit order that matches the current order book for a small part, so only a part of your contracts are being matched immediately against the order book. The rest of the order stays in the books and are then waiting for another trader to be taken out. The rest of the order will be eligible for a trading fee discount. This works like this with our standard order, GTC. As said before though, Deribit also offers multiple order types, including limit orders with 3 rule sets: good till cancel, fill or kill, and immediate or cancel. For a refresher, good till cancel is a default option. In this case, a limit order which is not filled will remain on the order book until it is filled. Fill or kill is where a position must be immediately and completely filled, or the order will be cancelled. And lastly, immediate or cancel, where the limit order will be executed and any partial position which would normally be left on the order book is cancelled, removing the need to cancel it yourself. Represented graphically, these are the differences between the limit order rules. Most traders only use GTC or good till cancel, so that's our default order, where an order may not be filled immediately and it stays in the order book. It may be partially filled, and that part that did not get filled stays in the order book. Or it's completely filled and there is no partial order to remain in the order book. Immediate or cancel, where an order must be partially or completely filled immediately, and the remaining order will not be left in the order book. This automatically frees up initial margin without having to manually cancel unfilled orders. And fill or kill. The order must be filled immediately, completely, not partially, or the order will be cancelled and will not remain on the order book. Additionally, below are 2 checkboxes which can modify the execution of a good till cancel limit order: post only and hidden. A post only limit order is an order which will automatically be modified to always enter the book as a limit order that's eligible for a trading fee discount. In case of a buy order, if the price entered in the price field is higher than the lowest ask price in the order book and would otherwise match with an ask order, Deribit will automatically modify your order to the highest bid order price below the current price. This is useful if the trader wishes to ensure they receive the market fee rebate on a position. There are several important points to note though. Once placed on the order book, the price, shown on the order form here, will not automatically change to chase the market if the order is not filled, and will remain on the order book until it is cancelled. Please note that post only cannot be used with fill or kill and immediate or cancel orders. Also, we have the hidden order feature that will add hidden orders in the book. Please note that hidden orders, although being limit orders in the order book waiting for someone else to hit you, are always orders with the full fee. A hidden limit order is an order that will not visibly appear in the order book to other traders because it's hidden. Some traders like to use hidden orders so they don't reveal their intention to the market. The downside of this strategy is that hidden orders will always be executed at the taker fee structure. Please note that the hidden checkbox cannot be used with fill or kill and immediate or cancel orders. This was a brief supplementary video guide for limit orders. Due to the nature of cryptocurrencies being a 24/7 market, there is often a need to stay away from the computer while you have a position or a strategy open. In order to reduce the risk associated with this, a stop-loss order may be used. A stop-loss order is an order that gets triggered at a certain price and in most cases meant to limit your loss in an up or down trend. That's why they're called stop-loss orders. We have stop limit orders where a user can set up their own limit price for the stop-loss order. Most traders use our stop limit orders to close their position in our perpetual or futures if the price reaches a certain level where the trader is not confident anymore to have an open position. Right now we have a long position in the Bitcoin perpetual, as you can see here. If we would like to set up a stop loss or stop limit to limit our loss when the price is going down, we take the following steps. This is an example stop limit order. Stop losses are entered via the stop limit tab at the top of the order form. In the stop price field, we define the price we would like the stop order to be executed. This is also known as the stop trigger price and can be triggered by either the index or the mark price. Using a stop limit order, we can set the stop price or the stop trigger to $66.84 with the price field at $66.86. This means that if the price falls to $66.84, then a limit order will appear at $66.86. This will close our long position if the price trend reaches that limit order. Now, whether the stop operates as a limit order, executing a position at a set price, or as a market order, buying or selling immediately at the best current price, is done via the price field. Deribit will add a stop market order button soon to simplify this further, but for now, I will show you how. With a long position, if you desire to put a stop order in and take the risk that it will not get hit or filled, put a price in this field that is the same or higher than the stop price. This would place a limit ask order on the order book, which, if matched, would be executed under the maker fee structure, entitling the user to a rebate. If you want to place a stop market order, you need to enter a price much lower than the stop price. An order with a price much lower than the stop price would be matched by our trading engine against the best prices in the book and highest bid order, and so it's very likely that you will get a much better price than the price you fill in the field. You can use a stop loss for your long position but also for your short position. But for a stop loss on your short position, you need to set up different prices. A buy or long position to close a sell or short position where, if a stop limit is required, the price field is lower than the stop price field, and if a market order is required, the price field is higher than the stop price field. A stop loss may also be used for a portion of your position or the entire position as desired via the quantity field. Stop positions can also be edited on the stops panel, and clicking either edit or cancel using this to either move or remove the stop. This was a brief supplementary video guide for stop loss orders.